In this video, we're going to talk about long-term investments. Now, long-term investments are a type of non-current asset. So when we take a look at the balance sheet, actually long-term investments, or just investments for short, is typically going to be the first thing you see following the list of current assets. So you've got the current assets, the top, the balance sheet, and you're going to have cash, accounts receivable, so forth, all these things. And then when you get down to the non-current portion, the first thing you're going to see is investments or long-term investments, what have you. So basically, it's best to kind of give examples of what these long and term investments are, so you have an idea what is meant, because it can mean a lot of different things. Now, securities is a very common type of long-term investment. Now, we could be talking about bonds, we could be talking about equity, securities, stock that you own in other firms, all these different types of things, any kind of security, provided that it's going to be held for the long term, right? So if we're talking like trading securities that the firm plans to sell in the next few months, for example, that's not going to be in the investment section, because what we're talking about is long term here. So these are bonds or stock that really the firm is going to hang on to for a long time. Has no intention of selling it anytime soon. And also, we can think of fixed assets that the firm isn't using in its operations on a day-to-day basis. For example, a piece of land that maybe the firm bought it and they had intentions of doing something, or they're holding it for speculation. They're hoping the price goes up. So it's not really part of their normal operations. They've got some factory elsewhere, and this land is just sitting here vacant. So because it's not used in the operations, they don't have any plans on selling anytime soon. Basically, they just lump it into this investment section, this land or some other kind of fixed asset that's not being used. And any kind of fund, like for example, some kind of investment in a pension fund, an investment in a sinking fund, cash surrender value of life insurance, those types of things, any kind of fund set aside for something, that's also going to be in the investment section. And then also any kind of non-consolidated subsidiary. And the reason you say non-consolidated, if it was consolidated, then it would just be part of your firm's financial statements. But you don't own enough of it for it to be consolidated, but you do have an investment in this firm, so you're going to go ahead and you're going to put it in this long-term investment section. So that these are the types of things that you would see. And it's important to bear in mind, you might get to thinking, hey, wait a minute, a lot of these things are kind of liquid, right? Securities are liquid. What is that doing in a non-current asset account? And there's long-term investment. Why isn't that a current asset of short-term investments? You might be wondering, why that's the case. And the important thing to bear in mind is that even though all these things, they may very well be liquid, the firm has no intention to sell them. So it's not selling them anytime soon in the near future. And so for that case, these are going to be in the long-term investment section and classified as non-current assets.